In November 2024, I started investing seriously in the Nairobi Securities Exchange. Fast forward to January 2026, and this portfolio is up 40%. No crypto, no day trading, no insider information, just Kenyan stocks. In this video, I'll break down exactly what I bought, why I avoided certain popular stocks, my top 5 winners, and most importantly, how I rebalance this portfolio today. If you invest in the NSE or you're thinking about it, this video will give you a real ground level perspective. Hi, my name is Kevin and this is my investment journey. Before we go any further, here is a quick but important disclaimer. Everything in this video is not financial advice. This is simply my personal experience investing in the Nairobi Securities Exchange. What worked for me and what didn't. Everyone's financial situation, risk tolerance, and objectives are different. So please do your own research and due diligence before investing in any stocks. And very importantly, past performance does not guarantee future results. So this is not a flex video. And yes, I know, a 40% return sounds impressive, but what matters is how it was achieved. The NSE is very different from global markets. It has lower liquidity, fewer listed companies, heavy sector concentration, and major mispricings if you're patient. One of my core rules while building this portfolio was avoiding portfolio duplication. What do I mean by portfolio duplication? So portfolio duplication is whereby if you're an investor using multiple platforms, or if you're an investor exposed to different stocks and shares markets, you'll find that some of the instruments that are listed within the Nairobi Securities Exchange are listed elsewhere globally as well. I'll give you an example that's applicable to my portfolio. The British American Tobacco Company, ticker symbol BAT, is listed on the NSE. But as a global investor, I'm already exposed to this instrument through my investments elsewhere. So instead, I focus on companies that are uniquely Kenyan. The local banks, local utilities, local infrastructure, near monopolies tied directly to the Kenyan economy. And that's why the NSE has a real edge over other stocks and shares markets. Now let's get into the fun part. Here is my full NSE portfolio as of January 2026. It includes stocks in the banking sector like KCB, Equity, Cooperative Bank, and the NIC Bank. Utilities like Kenyan and KPLC, telecommunication exposure through Safaricom, the market infrastructure, which is the NSE PLC, and a few deep value and turnaround plays. Every position I hold in this portfolio has a reason behind it, and some has worked better than others, as I'll show you next. So as you can see, within my portfolio, I've got winners and losers. Here are my top 5 winners that has largely contributed to my 40% gain since I started building this portfolio. The number 1 winner is the Kenyan Insurance, which is up 90%. My little analysis into Kenya is that Kenya is a stock that has for a long time been ignored, underpriced, and then revalued once the fundamentals stabilized, leading to this deep value re-rating play. My second top winner is Nairobi Securities Exchange PLC, the stock exchange itself. So this stock represents low float, strong dividends, and operating leverage once market activities picked up. My third biggest winner in this portfolio is Safaricom, which is up 66%. Safaricom has dominant cash flows, data growth, and long term. My fourth top winner is Kenyan, which is up 61%. Kenyan is a regulated utility with predictable revenues and defensive characteristics. My fifth top winner is NCBA Bank, which is up 55%. NCBA Bank had a quiet execution after their merger, improving asset quality and a delayed market reaction, leading to that instant boom in the market price for the stock. Percentage returns are nice, but shillings matters more. Safaricom, NCBA Bank, Nairobi Securities Exchange, East African Breweries Limited, and KCB did most of the heavy lifting in this portfolio. This highlights something critical. Position sizing matters just as much as picking the right stock. It's also fair to comment on the losers in this portfolio and my mistakes while building this portfolio. As you've seen, Umeme Company is the only loser in this portfolio. With negative 47% performance, this was by far my worst performer. At this point, this is not volatility. As an investor, you need to ask yourself, if I didn't own this stock today, would I buy it at this price? In relation to my own portfolio strategy, this is a stock that I would be looking to exit as soon as the right opportunity presents itself. It's my self-made rule never to sell any stocks while in the red. So I'll wait for this stock to come back up, and once I've regained my money invested into this stock, I'll be looking to sell. After more than 1 year of investing in the NSE, I'd say that most of my success is derived from the fact that my portfolio does not only concentrate on one sector. Rather, it's a heavily diversified portfolio. In this portfolio, the banks benefited from earning growth and improved asset quality. Utilities provided stability. Safaricom anchored the portfolio. But remember, what worked in 2025 may not work the same way in 2026. If I'm to get a fresh start in 2026, if I'm to do this all over again, this is how I'll rebalance my portfolio. Again, this is not a recommendation, just how I personally would rebalance based on my experience. First of all, I'll trim my big re-ratings. The stocks that are up more than 50%, like the Kenyan, NSE, Kenyan, and others that I've shown you earlier, I'd try and take some profit. In as much as we are aiming to stay invested for the long run, it's always good to take profit sometimes, and that's why we're investing in the first place. Secondly, I'd simplify my bank exposure just to get my percentages right in terms of diversification and not end up with a portfolio whereby one sector dominates with over 50% allocation. And lastly, I'll deal with the losers in my portfolio. Like I've already mentioned before, when an opportunity presents itself, I'd try to exit my position in Umeme. Here are the key lessons that I learned after building my portfolio and investing for over 1 year. Number one, the NSE rewards patience. The longer you stay invested, the more the rewards. Illiquidity can be an advantage if perfectly executed. Local knowledge matters. As a Kenyan investor, try to stay up to date with the business news, because one thing I know from investing for over 1 year, markets react to news. So whenever you hear some positive news, it is almost a guarantee that your stocks and shares market price will go up. And if there's a bad news, then the market will react in the opposite direction. So this can give you a clue into the perfect times to buy or sell your positions in a stock. And then avoiding duplication, especially for people who are global investors or people who are exposed to other markets and stocks exchange. So having one company in, for example, 2 or 3 different portfolios is like putting all your eggs in one basket. I'll give an example with the sports betting. If you predict a team to win their match and they end up losing, and you had this same prediction in different betting slips, you'll end up losing your money in other slips. Even if all the other teams have won, you'll end up losing just because of this one team that has lost. The same principle applies to stocks investment. When you invest in a company in more than one portfolio and something goes wrong and this company ends up losing money, you'll end up losing your money in multiple occasions, and that is not wise investing, in my opinion. And then process beats prediction, in that the more disciplined you are, the more consistent you are with your investment, the higher the likelihood of you getting a positive return in the long run. If you've stayed with me up to this point in the video, I'd like to leave you with one key message. This 40% return didn't come from guessing. It came from understanding the market, buying when sentiment was low, and sticking to a process. If you'd like a follow-up video, for example, building a 2026 NSE portfolio, deep diving into one stock, or comparing the NSE to global markets, Let me know in the comments below. Thank you for watching and goodbye.